What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on aircraft parts and maintenance company, StandardAero. And when we take a look at the chart, we're simply going to be looking for two things. One, what is the direction of the trend? And two, are there clues as to where the big money might be patiently stacked up, patiently waiting to buy, or patiently waiting to sell? Now, as you notice, we don't have that much of a chart to work with since this company conducted its IPO just last September. But there are several clues here of where it looks like institutions might be looking for a discount to buy, and also where they may be sitting up at higher prices looking to sell. So let's get right into it. First thing we're going to do is we're going to check the trend. When we look at the trend, we're going to be simply looking for two things. What are the two most recent highs and what are the two most recent lows? So here's high number one, here's high number two, here's low number one, and here's low number two. And as you notice, as they move from left to right, the highs are moving higher. And as they move left from right also, the lows are also moving higher. So we have confirmation of higher highs and higher lows, and that's the definition of an uptrend. So there's no doubt that StandardAero is in at least a short-term to intermediate-term uptrend. Now, if we're in an uptrend, we'll simply be looking for support levels for either a quick bounce trade or for a lower entry price for a longer-term position. So there is a support level right here in the 30.25 to 28.99 price range. And there's another support level just below that, right down here, in the 28.01 to 27.02 price range. Okay, so two support levels that are about 1 point wide to consider for a quick bounce trade, or once again for a lower entry price if you're looking for a longer term position. Now let's go up and to the left and see if we can find clues of where there might be sellers waiting around to start selling if price were to get up there. In other words, we're going to look for a resistance level. And yes, there is a resistance level right here in the 32.25 to 34.35 price range. And that level formed just after the IPO started trading, a few days right after the IPO. Okay, so there's a bit of a ceiling that we're actually coming close to bumping up against. And so I would expect there to be at least a little bit of turbulence, or maybe price even gets rejected if we do get to the 32.25 price range, at least temporarily. That doesn't mean we can't blow right through it. We could slice right through that resistance level like a hot knife through butter. Okay, but I'm going to respect the fact that there were sellers that took the price down in the past. Maybe they're still waiting up there at that price range, looking to start selling again. So if that's the case, we'd consider at least be cognizant and respectful of that resistance level if we want to enter in one of these two support levels for a bounce trade. Okay, so let's go assess the reward to risk ratio of both of these levels. And so if you were to place a buy limit order at 30.25, protective stop just below 28.99, and your target was right there at that resistance level, you'd only be looking at a 1.6 to 1 reward to risk ratio. Okay, so that is if your win rate is above 50%, that's doable. But ideally, we look for more. Reward relative to the amount of risk you're going to take. One way you could address that would simply be bring your entry price down. So if you wanted to be a little more patient and wait for price to pull back closer to 29.89. Then you're looking at a 2.48 to 1 reward to risk ratio. Okay, so when you consider doing that, the risk is you might not get filled if it pulls back just to the 30 price point. Okay, but these are things you might consider as you start constructing your trade setups. Okay, and if you wanted to be a little more price sensitive, thinking for a bigger pullback, you'd simply place a buy limit order at 28. Protective stop just below 27.02, target all the way up to same price target. And that trade setup right there is a 3.81 to 1 reward to risk ratio. And if that's the trade that you wanted to do, the risk is maybe price bounces off this upper level and you wouldn't get filled if that were the case. Okay, so these would be the two ideal scenarios if you wanted to take one of these two trade setups. In scenario one, you'd be looking for price to pull back to the 29.89 price point, okay, and to bounce off of that level and go test that resistance level, okay. If you wanted to patiently wait at a lower price point and take the chance that it doesn't pull all the way back, you'd be looking and hoping for price to do something more like this, to pull back all the way down to 28, bounce off that level before working its way to the resistance, the all-time resistance level. Okay, so 2 potential trade setups to consider here on StandardAero. So let's wrap up today's session, folks. Hope you enjoyed the session. I'll be back each day this week or so for more technical analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.